The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, and we're looking at a Dow that's up 21 at 12,464. S&P's up 1309, up 420. Comp Index is up 5 at 2818. Gold is, gold is up. Down? What is this? Gold just disappeared. Let me get it right now. GLD. I didn't want to actually lose the place because Facebook's about to open, and I want to get that opening price here. So GCM, a little behind, but gold is up 19 at 1594. Silver is up. SIM. Let's go to SIM. Silver is up 78 at 2878. You've got crude oil. Crude oil. Let's go to the N contract here. Crude oil is down 18 cents at 92.77. Bonds. USM. Bonds are right now down 22.30 seconds, having made a leg E, potential peak E right here, and going to watch this closely. It's the high yesterday was 148.23, 148.20, missed it by 4 cents, making a new high. So that says that we could be making a little bit of a short-term top here, although I'm going to be watching that closely. Most importantly is that we want to see whether or not the dollar DXY is breaking. That the dollar is testing. Did it go to the new recovery high? 81.76. 81.76 is 3 cents or 2 cents. 81.79. Missed by 4 cents, making a new recovery high from the a high above the high of January the 13th. In a beautiful cup formation. It looks like two U's or a pair of eyeglasses and reading glasses, that is. And most important here is that the stochastic, if it holds in the 90% area, that means that the dollar can go higher and our stock market will be somewhat vulnerable. The VIX index is very important right here. The VIX right now is at 2331. Made a leg C, and now it looks like a peak C high. Whoa, let me just double check. Did I miss something? 41.49. No, I didn't. So that's leg C. So just like the dollar, the VIX index says we could have one more pullback in the market coming up in the next couple of days, and then we should see a pretty strong bounce. So I'll give you those levels in a moment. I'm busy watching the Facebook here to see when it starts. All right, let's just get back to normalcy, and we'll just do what we have to do. The Dow right now broke and closed under the 12,470 200-period exponential moving average. To me, that was a very important level. It said that there is internal weakness, but this is very important. We've only made two legs down. We've made a new low today. So this is still leg B to the downside. Lowercase, remember my notation? Uppercase shows you a buy mode or at least an up move with a higher peak, and lowercase means that you're going down. So that says it's taken just two legs, and the one bounce was so pathetic, that only little green candle there. It looks like a midpoint. It looks, in fact, very much like what I call a propeller shaft move, where you've got a one-to-one. This is just something happens periodically. It's just a beautiful one-to-one, and we've done it exactly one-to-one in the propeller shaft. No, it's a little more. I have to go to the high and the low. Yeah, okay, it's almost there. That says it could go down to 12,418, somewhere around there. So that says to me that at this particular point, we need a trigger, and the trigger has to be the volatility index. The VIX, the VIX, which I've been saying goes into the 28s. That's the level I'm really looking for a pretty severe upside turnaround, downside pullback in the VIX. But so far, 25, what was that high? 24.51 was the high yesterday. So in the 20s, mid-20s, there is selling pressure. You cannot refute the fact that there is selling pressure, and you can see it. Now, the volatility index has also had that one-to-one move to the upside. This is going to be interesting. Let's look at the and the DXD. Well, they're not exactly related. We took our profits this morning in the DXD that we have, which is 200% short. That is in leg C, but you know, it's not the root. The root is the Dow for this 200% short, the ultra short Dow 30 Pro shares. Let's look at the QID. The QID right now is, and this is very interesting because either it started a brand new move, and this is leg B, or it's F. But the stochastic and the QID, the 200% short, is at 97%. You cannot deny that is strength in the short side of the market. Where would it go to in the left side, right side price time match? I'm going to be teaching this, folks, this particular technique. Oops, that's the one. Needs to move one bar. There. That says by Monday or so, we should be testing the 36.79 level. Almost got there today, 36.18. And that's that cup formation with an inside wedge. Shows you exactly where we should be going. And we're going to be watching this really closely. So in the overall scenario, market is very weak. You can even see today, after a move like we've just had, we should be up 85 to 105 points at this particular stage. There's still time. Options expiration. I'm suspecting we're going to have a sudden spike to the upside today. Just the way I'm looking at it, we don't know. Now, let's go through a couple of things. In this Facebook phenomenon that's going on, there are two ways of thinking of it. There's the layman's way of looking at it, which says, hey, I missed many of these. I missed Apple, I missed Google, or they've got Apple, they've got Google. I want this for my grandkids, or whatever it is. I want this for the longer term. Well, if your attitude is that this is something that you want to buy and hold, as if you were holding just a little bit of gold in your portfolio, because that's the way you have a balanced portfolio, I would say fine. If your overall portfolio says, I can afford to take some money and sock it away, I'm saying to you, I see no problem with that whatsoever. But the way to do it is, if there's an hysterical up move at the open, it's supposed to be 38 is the so-called pre-market price. It's in Germany. I heard on the news it was trading, I think, at $70. Well, 70 to me is a little high. I would probably want to wait somewhere in the 50s, and I would then start a small position. Just I'm talking about like 10, 15, just to get a feel. And then I would put in at 30% below today's high. I would put in for another 5 or 10 shares, 20 shares. It depends on your portfolio, but I wouldn't get carried away. You will at some point get a fabulous buying opportunity for a decent rally. On the IPO day, now, they're talking about 10 out of 10 of the recent IPOs failed to rally after their first day and closed lower, and they kept going down. I'm thinking that if the way the market, the professionals are looking at it is, I think it's not correct. I think that there's a buzz, and the buzz says that we could rally today, close at 3 o'clock, be at the high of the day, then pull back towards the end of the day with a really nice close. That the buzz over the weekend is, wow, I missed getting around. And then Monday, it gaps up, and then it has a decent pullback, but just an intraday pullback, and then closes close to the high. And Tuesday, you actually see the high. It might be Tuesday afternoon or Wednesday morning, as everyone just throws up their hands and says, I've missed it, I want to get. And my suspicion is that Wednesday, it closes down, just very sharply down for the very first time. That's when I think you can start getting a perspective on it. So this is just my scenario. I haven't got it as a trade in my opening call. I've discussed it for anybody who's wanting to get it, and I said at 11 o'clock when it comes out on my show, I'll discuss some parameters, but, that's it. So Michael in Palm Harbor, he wanted to know about XLF, couldn't hold on. XLF, folks, is the financial, the S&P Select Financial Spider Fund. Is trading at 13.90. Now, the daily chart has had a very sharp pullback in percentage terms from the 1601 high that it made, C1, C2 in the ChapmanWave on the 27th of March. So that on a percentage basis, not quite 3 points. Let's call it 2 points. 2.5 points. That is big. Can it bounce? Well, if it bounces, it needs to do it really soon, and the level to hit is 14.46. If the question is, would you buy it right now? I'm still very selective about this market, and I think the financials are a place that you might get a bounce, but if you do get the bounce, it's going to be an issue. If it cannot hold, and the level to hold is 14.46. It's got to hit it, pull back to no more than 14.20. It's at 13.90 right now, and then by midweek next week it needs to be up in the 14.63 to 14.72 area. If it can get that going, I'd say okay, that's a bounce. Let's see what happens after this, but I go one step by one step. If you're really determined that you want to be in the XLF for some reason, I don't think you should do anything more than, if you want to nibble here at 13.89, you've got to have a stop at 13.63, a 30-cent stop, 2%. I don't think it's such a big deal. But look at the weekly chart with the potential to make a cup and handle. I hate those patterns, but if it fails and it breaks under about 13.30, 13.20, this thing can really come down quite a bit more because the MACD and the stochastic are turning down. That's number one. Number two is in the monthly chart. It is a peak A that's been made, and the stochastic is unfortunately only at 67. If it was 87 and pulling back, I'd say, hey, that's good technical. I need to see some evidence that I want to go into. I've avoided the bank stocks, the XLF for a while. I think we had it just for a very brief moment recently, but I've really mostly avoided it. I don't see anything there. Let's go to our next caller, Michael in Englewood. Hi, Michael. How are you? Michael, you there?
Hi, Basil.
Hi, how are you doing?
I'm doing great. How are you?
Very well, thank you.
I wanted to ask you about Walmart. It made a run up a few months ago, and then it started to get very volatile, very choppy.
Correct.
And it looks. What do you think about the possibility of it making a new high? It matched the old high today.
Isn't it interesting? Let me just explain to folks what if you're looking at Tiger TV, this is going to be very interesting. If you look at Walmart, MWT is the symbol. I've got it now in leg C up at a new recovery high. It's actually an all-time high. Is it an all-time high? Give me a second. But what's most fascinating about this is that it's got an island reversal. This is I showed a very unusual couple of island reversals in Celgene, I think it was CLG the other day, but this is also really weird. It gaps down from a peak F top on the 20th of April, 23rd, it just plunges, goes to the 200 period moving average for 2 days, then closes above it, and then it's made a brand new move in a U-shaped formation, but then it gapped up on earnings news the other day for an island reversal. That is really unusual, this kind of pattern. You know what? I do like this chart. I looked at it very closely the other day, and there's a pattern that I occasionally talk about. It's called the inverse cup and handle, where you make like a handle, and then you make the deeper cup, which is very interesting. I'll talk about it the moment we get back. Maybe Facebook will have opened to that particular point. Are you in the stock or not yet?
Yes.
Not yet? Okay. All right, let me talk about it in a few minutes, and I'll do some work on it, and I'll give you parameters to look for. Thanks for holding. Michael in Englewood, down.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investment Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 2, S&P's up $1.70. They haven't been able to open Facebook because there's a delay. That's so interesting that the NASDAQ was not prepared for this absolute plethora, this engulfing demand for the stock. They should have had this down. It should have been a smooth entry. It's going to be very interesting to see where they spike the price now. I should have put in a bid for one share at 150 and really messed it up. So here we go. I mean, 150 the price, not 150 shares. That would be very interesting. So here we go with, we're talking with Michael in Englewood, and we're looking at Walmart. Now, Walmart, if you're looking at Tiger Technicians Hour, if you're looking at TFNN 1, you will see something very interesting about Walmart. In the monthly chart, this is testing in a very big rectangle formation. The previous high of 63.81, doji high, back in September of 2008. If I squash this, look at what happens. It's actually been in this trading range. Now, I've often spoken about a rectangle formation being the most frustrating formation, unless you can buy at the lows and sell at the highs. That's really what you have to do. You don't want to short at the lows thinking it's going to break down, but at the same time, you don't know if you want to buy at the highs, because every time you do, that was actually the top of that formation. I've even drawn in a dashed line that shows exactly where it is. So, Michael, my question here is this going to be any different to other times when it's gone up to this particular sell zone right there, going back after it made the high in December of 2008? in 1999 at 70.25, it went way down to the 40s. I think it was, 41, 44. Then it made this trading range, and after that, it could never break above the 63, 64 area. It just kept on being repelled. It's amazing. Even years would go by, and it stopped right at that level. Is this going to be different? Well, this is what is different. Whereas last time it did that at 63.51 with the doji in the monthly chart, September of 2008, that was 9 years later, there was a volume spike to the top. I call those climactic spikes. I can't remember now. I used to have this notated with the ChapmanWave on the volume, but I haven't got it now. But what happened when it made that high, the stochastic was turning down. This time what we've got is the stochastic's attempting to turn up, but it's a little lower, and the MACD is still moving up. So this is what I'm going to ask you. It's from your voice, from the tone of your voice. You were looking at this not just as a very quick trade. You were looking at this as something that you could buy and hold maybe even for a couple of months. Is that correct?
Yes.
You know, if that's the case, I have to go with the weight of evidence, which says every time it's got here before, it's been repelled. Therefore, what is the upside? The upside is maybe 63.38, that's a point, less than a point or a point or so. If it does break that, it could go all the way to the previous high, which was at 70. So I'm going to make a recommendation. The market right now is an extremely it's at an inflection point, especially because of that 200-period moving average in the Dow. If we close much lower today, after everything's said and done, instead of being up 65 to 85 in the Dow, up 9 or so on the S&P, but rather down that amount, I wouldn't want you in Walmart. I wouldn't want you looking at long positions at all at this particular point. So I'm going to say to you, because your question is a longer-term one, I'm prepared to give it a day or two. Let me do some little work over the weekend. Why don't you call me? Can you call me Monday or even Wednesday? Let's look at it again. I don't think you're missing out on very much at this particular point. I know the 120-minute chart, yeah, it's looking quite good. I don't want you to say to you, just nibble on a little bit here and you can add and have a stop. That's normally what I would say, but market conditions say... Excuse me, that was a sneeze. I didn't even have a chance to do anything else. Excuse me. Market conditions say that if the general market is going to turn down much lower from here, it's going to drag Walmart, and I don't see that much upside. But if there is a counter-trend rally and we're going to have a 5 to 7 day upside move, it doesn't have to be very big, but it's time and some price on the upside, Walmart should be a participant. So this is what I'm going to recommend to you. If you are prepared just to start a small position right now at 62.53, that position should still have a stop because of that big gap. It should still have a stop at about 61.50. Let's keep that in mind for a couple of days. And the only reason why I say it is because money managers will have to look for stocks that have acted the best, and they might probably drift into something like a Walmart. But if it gets to 63.50, that's going to be very good action. I'd like you to call me again and let's restudy it. So either nibble here with about a point stop or just wait and have patience to see what happens by Monday or so. Okay?
Thanks, Basil.
Thank you very much. Folks, we were talking to Michael in... Michael in Englewood. And, the Michael in Englewood. We'll be back with Victor in New Jersey straight after this. Victor, you wanted to look at? BPO.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Facebook opened, faces coming around the corner, and it's at 40.56. It opened at 42.05 and it went to 43.20 as a high. And a low 42 round number. It's come back down and now it's at 40.45 in the 1 minute chart. 5 minute chart hasn't started working. It will start working. 1, 2, 3, 4, 5. Oops, 5 minute chart should start. Well, 3 minute chart's working. 3 minute chart does the same thing. 5 minute won't open until 5. 5 minutes opens and we're coming around the corner and we're going to go right to our next caller. We've got Victor. Hi, Victor.
Hey, do you realize Facebook is just doing an IPO because California is so in debt? All you losers are following it, and all they're doing is paying.
And all they what? Whoops. Losers following it? No. We follow anything that moves. Believe me, I will follow anything that moves. Victor, that's a silly thing to say when you wanted to talk about BP. BP, that's the biggest loser of all. That wasn't very polite. BP, you wanted to talk about BP PLC, oil integrated. It's at 37.26, and it could very well retest the low of 33.62. All right, we're going to go back to Facebook. So we'll have a show with Facebook here. So what we're looking for is some kind of a low, at least a couple of lows to be established, and then we'll see some kind of a bounce. Now, I happen to love this opening in Facebook, and I'll tell you why. If it was up in the 55, 60, 70 area, that kind of hysteria would be really out of sight. It would just be wrong. I consider this to be sanity in what one would have expected. I'm not talking about anything to do with fundamentals or anything. I'm only talking about the fervor, the enthusiasm, the desperateness of wanting to own an I. Can you believe? So 38 was the pre-number, and now it's trading at 40. Round number low, 40. All right, let's watch this closely. 40 round number low, going once, going twice, going 3 times. Okay, I think we've got a bar here. We've got a full bar. No, it's not yet the end of the bar. We'll wait for another couple of seconds. I should have had my time clock out there. A couple of seconds, going 13, 12, 16. Oops, it made another low. No, 40's still the low. Watch that closely. Now, I wouldn't be surprised if 40 is the low, but it actually slips to 39 round number low. But we'll watch this closely, because what we want to see is a sudden move up to 40.65, just above the 9-period exponential moving average without taking the 40. Facebook, FB is the symbol, folks. We're looking at closely. Dow's down 43, S&P's down 372. Whoa, big disappointment in the market as to this opening right now. And we're testing the 40. The 40 is about to go once. 40 is about to go twice. No, the telephone went. We won't do that. We're going to put the telephone down to soft. We won't take it. Watching that 40 number real closely. Is this the number? Can you start nibbling at 40? Well, we'll see very soon. Going once. That's interesting. It's still, hey, this is the longest it's ever held, the 40 level. This is incredible, folks. 42 was the previous low number, and now it's at 42. It refuses to buy. It will not go down below 40. Watching it closely. Close. 39. No. 39, 91, 39. Nope. 40. Well, this is very interesting. The stock market is not liking the news so far. It's gone back to its down moves. It's actually, now this is very interesting, because the Dow has made a lower low. Now this is the pattern that I was showing subscribers this morning. The arch that's made in the Dow right here in the 120-minute chart, if you're looking at Tiger TV, and the cup that's made in the volatility index says we're getting pretty close to a little kiss where the two get very close together, and then we're going to watch to see whether or not there's some kind of a rally. Watching the volatility index up in the 24s, no good. That's selling pressure. It's going to have to make a really sudden and sharp turnaround. Wow, this is options expiration day, and an options expiration day, this is just the perfect day to suddenly turn around. 39.91 broke the 40 levels. Now we're going to have to watch this. And there was a spike, and the spike went to 40.50 in the, so it opened at 40. There's your round number that I was looking for, but I want to see a round number as a base. That would be very good. So, now, all right, so let's just do this. We'll wait. We'll watch this closely. We're not doing anything right now. So, so this is what I just spoke about. I can't even remember if I spoke about it. No, I spoke about it when I did Steve's show earlier on. What I was saying is, if you're looking for I spoke about this, the longer-term outlook on Facebook, I'd say, if this is money that you can set aside, hey, get a small little bit right now, almost as an experiment in what happens with this type of IPO. But it cannot be more than that. It's just a small number. And what I also said was that the high of the day today, whatever it is, let it drop about 30% from the high of today's number, and put that in. Now, you put in a bid for another small amount, say 30% lower than the number that it is today, and just put it in. And again, small numbers. You'll have plenty of time later on. Let it mature a little bit as a stock that has a history. But in the meantime, it's made that 40 round number open on the bar of 39 minutes past 11 Eastern Time, and it's made a low of 39.91. So we'll watch. I would not be surprised if there's just one sudden little dip to the 39.20 to 39 area. We're going to watch it closely. Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Great, Basil. Hey, I called in last week about shorting the IWM.
Yes.
And I have a position in the TWM, and I don't know. I was wondering what your opinion is of where I should be taking money off. I know that you said the dollar, I believe, is in leg C.
Leg C, very close to some. And now what's happened is you've got the TWM is in leg C as well.
Right.
I'm going to make a suggestion, because the IWM was one of the weaker indices, but what's happened sometimes is that a weaker indice concludes its first big move down before the others, and the others play catch up. Now it's sitting. Most fund managers will look at something like an IWM, that's the Russell 2000, and use the 200 simple moving average. In my experience, most fund managers, that's kind of the moving average. They don't do much with the moving averages, so they just grab it, and it's usually simple. Well, it's right there now. It's way underneath the 77.87 level of the 200-period moving average. It's trading right now at 75.07, minus 33. So the level that I'm looking at is the simple moving average is around about 75.28. The low today is 74.86. Now, if you're looking at this because my weekly chart is still very weak,
right,
and the stochastic is not yet showing any signs of turning around to the upside, and I'm a little concerned about the monthly chart. If you're able to position have positions on rather than just a particular position that is the only one you trade, then I would recommend that within this level of 75.10 where it is now, and I really don't see it unless it's just a smash to the downside on Monday because of whatever it is, Europe, I don't know what. Keep your major position, but within this position, and I'd say around about 74.61 to 74, maybe 51, I'd be taking something off. Two things. One is money management to reward yourself.
Right.
The other is that's what you probably want to put back on. If there's a rally in the IWM towards the 77.87, that's the 200-period moving average, and then it pops above it, and then arches over, makes that dreaded H pattern, that's when you might want to put it back on. But that would be my recommendation. First of all, congratulations, great trade. Number two is I don't yet have a sign. I'm looking for the VIX to really get into the 28s or higher before I can establish some kind of real good force to the upside, a tradable rally to the upside.
Right. That was my next question, too. Trying to put everything together, the dollar, the VIX, and everything. And now, is the VIX, what leg and what time frame is the VIX in a daily and a weekly?
In the daily, it is in leg C, making peak C today. So I suspect, together with the dollar, we could have a rally maybe Monday or Tuesday. We suddenly have another drop. So a rally in the market and then another drop, that's a possibility, and then the dollar. But for me, it's the dollar weekly candle that is very strong.
Okay.
And that's what I'm watching. It's above the 200-period exponential moving average. So the weekly VIX is also above. I'm sorry, I meant the VIX. The VIX index is above the 200-period moving average, but it's that pattern that I've been talking about for a couple of weeks, and that says that the volatility index, whenever it's gone into the 19 to 13 or 14 area, if it cannot substantially hold that level without breaking into the 20 area, that says once it gets to 20, you've got to be careful because it's used that as a springboard. So my monthly says you've got to be careful here. So I did, for my subscribers, did take off our 200% short position because I thought we had a really nice profit, and I wanted to try to get back in a little later. But we've kept our other shorts in the stocks because I think they will more than make up if we start to decline again. But I do intend to put that back on that because I don't think that this is done in time and price. Now, when I talk about price, that would say that the IWM, so let me just go back to the VIX. The 27.31 is the simple period moving average, the next level of resistance in the volatility index. That's why I'm saying if the VIX gets to the 28s, that's where really important information is going to be imparted to me about the general market. So stay in your position. You can take a little bit off now as kind of a reward. That's something that you probably put back. Now, where would you be wrong? If the IWM suddenly takes off and it decisively breaks above all those highs that were made recently in the in the 78.50 area. So if it from 75.17, if it has a spectacular rally going back and taking back all the losses it just made, and it can close above the 78.50 area, I'd say, okay, be careful. But somewhere in there is probably where I'm going to be looking to say, is this going to be a lowercase h, dreaded H failure pattern? I think you're in a good position. I would not overthink it unless you want to just take a little bit off to reward yourself, but I would certainly keep that core position.
Right. Okay. Well, thanks for the information, and appreciate everything you do, Basil.
That's absolutely my pleasure. Thank you so much for calling. I do appreciate it. Folks, Facebook is now at 39.55. It's gone to a lower low. Remember, 39.20s, maybe 39 round number. That's what I'll be watching. This is the way the move looks at this particular point. And to think that it was priced between 28 and 35 and even maybe 38 pre-market, and someone is keeping this down, and it could be the amount of shares being sold, maybe by insiders, who knows. But this is very important. That's going to weigh on the market a little bit. Let's go to Andy in Kansas City. Oh, Andy's not on. He wants to know about J.P. Morgan. He couldn't hold. J.P. Morgan, folks, wow. Now, there are two schools of thought. I hear it all the time. The one school of thought says, $2 billion, look how much they've got. You lose $2 billion. I don't believe the $2 billion is even the starters. I believe that figure is going to be expanded upon for J.P. Morgan. I personally would avoid it. If you want to go into bank stocks, UBS, was it USB or UBS? I never remember with the symbol on that. Let me just do UBS. Well, you asked about J.P. Morgan, and I'm going to say not yet. I would touch it for a rally, a bounce, but not yet. It's UBS. No, it's USB. Yeah, it must be U.S. Bancorp. Made a peak D, and that's been one of the absolute best of the banks. It made a peak D in the ChapmanWave at 32.98 back on the 1st of May. It's pulling back. So if it breaks and closes underneath 30.33, that would be a problem. But this is I'd rather be looking at a USB than to be looking at U.S. Bancorp, which is trading at 30.58, down 7 cents, than to be messing with anything that has a history of failure. So now let's watch this. Let's get back to... So the answer to your question is, don't touch J.P. Morgan Monday or Wednesday next week. Let's look at it together. There could be a pretty good rally percentage-wise in J.P. Morgan. But why touch something that is the hot rail? I mean... you remember there was a period where Berkshire Hathaway was under pressure. Amazing how that went by. There were never charges made. Boy, that looked like insider trading to me, with Berkshire Hathaway. But when you are Mr. N with the N crowd, nothing happens. So Berkshire failed to do anything for a long time while it was under a cloud. Don't trade stocks under a cloud. All you need to do if you're under a cloud, get an umbrella. It's not worth it. All right, let's get back. 29, broke once, broke twice, 38.50. Disappointing IPO. You know, I had a feeling, my wife's been bugging me about this for a long time, and I kind of stalled and said, okay, yeah, da. Oh, let's see how it does today. I don't think there should be any rush into something like this, not core positions. If you want to nibble, I see no problem with treating it as just a little percent, a stock that you're getting a feel for before you commit yourself, and to put up maybe, if you have a decent portfolio, to put up $1,000 as an experiment, or $700, or even $1,500. I see no problem with that whatsoever. To add to the position, I do see a problem, and to also get a big position, I see a problem, because there's no history involved. You're doing something purely on spec. Let it get some kind of, let us show gumption. Let's see what it can do. Can it hold 38 round number low? 38.03, 38.03, going once, going twice. We'll watch this closely. We've got another 10 minutes to go before the end of the show. Don't forget, today we have Nico Dohan. Don't forget, I've got a very special webinar coming up, an all-day webinar. It'll be on the front page later today. It'll be June the 9th, Friday.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Before I wrap up, a couple of things. One is, in the upcoming webinar, although I'll be dealing in the first couple of hours, I'm going to go through the ChapmanWave notation because certainly people just need to know exactly what the concept is. The most important thing I'm going to be showing is how can you use channel lines. For instance, I've got, if you're looking at Tiger TV, I've got the USB weekly chart up. Look at that beautiful single line support. Look at that beautiful single line resistance. Within that, I'll teach you how you can draw what I call the inside track, and that gives you the support propellant zone, and it gives you the repellent zone. And that repellent zone means that when you get to a certain area, you've got to be careful, because that's where the price always gets repelled. Now, when it turns down, I'm going to then show you how you can get a particular point on the left side as your low point, and you can start measuring in time and price how you can go to the right side if it starts to make an arch formation, how you can draw in a diagonal, as I showed subscribers. And what I do with my subscribers, I give them exercises, I give them all sorts of things to show them the veracity and show them the skill that's needed in the ChapmanWave itself. And if you look at the way the channels work, look when the Dow 120-minute chart, the DIA was making its up move. Look at the way that beautiful repellent zone worked. It went to a peaky, fine, but then it also broke down. I'll show you the 9-period moving average, how important that is. I'll show you the left side, right side, price time. Look, it broke below in a shorter time period, tried to rally, made the pattern I call the dreaded H, broke down, and now it's gone underneath the dashed line support level. That means that for the diamonds, the resistance now will be the 124.50. It's at 123.62, 123.20 to 124.50 area, with the 9-period moving 125.06. Key metrics that you got to look at. How can you use the stochastic and the MACD? So this is it. It's really going to be very comprehensive, but exactly to the point of learning how to use trend lines, whether they are horizontal, left side, right side support levels for time and price matches, whether they are uptrends or downtrends, how to use the channels, how to use the buy and sell zones. Most importantly, I'll show the arches in the arch or cup formation. How can you use those to your best benefit? So now we've got 38 round number was the low once, twice, 3 times, 4, 5, 6 times in the 1 minute chart. How do you use round numbers? Well, it's just bounced from 38 round number low to the 38.59 level in the 1 minute chart. Well, round numbers, remember, when I was interviewed with Tom and when I did my show, I was talking about Apple having just made a round number high, all-time high at 644.00 on the 10th of April. And the pattern I was looking at was a potential. If it broke under, I think it was 495, it could go 595. It could go very quickly towards the gap. Well, the gap was 575 to 568. It made a round number. Let me just make this clearer. It made a round number low, 555 on the 24th of April, rallied to round number 618. I mentioned that over and over on the 25th of April. Now look what it's done. It's come all the way back. Well, what's it doing? It's coming down to test what? To test the low bar of the 6th of March, 516.22. The low today is 522.88. Can I do a left side, right side price time match? I certainly can. And I'm going to do it in my usual way of being conservative. Oops. And I'll just do that. Don't forget, Nico DeHaan coming up. Don't forget, you've got a webinar coming up. It's going to go through all these different chart patterns. That says that Apple, by about the 24th of May, should break the low bar of 516.22. Thanks for being here. And don't forget, Dave White this afternoon, 3 to 4. Fabulous show as always. And the guy that wraps up the whole week and looks at next week, Tom O'Brien. Have a great week.